one of the interesting parts, I'm getting a little off of topic of net family property, but one of the interesting things is when people are self-employed and they show up with their T4 slip and their tax return, which shows that they make, well, I had one case last year where the fellow for probably 20 years showed that he made $75,000 a year every year, year after year, never went up, never went down. And it was that kind of case where you hire an accountant to have a look at his books because he worked for himself. And his accountant wrote a letter saying that the guy really made $357,000 a year, not $75,000 a year. That was his accountant. So I happened to be lucky enough to be representing the wife who was looking for support. She was getting about $500 a month, which I got bumped up to, I think it was around $3,000, and then we got this letter and it went to $10,000. So then the court ordered it, and then all of a sudden the judge ordered that the husband pay all my legal fees and, you know, all the accounting fees. And this guy wouldn't settle, didn't want to settle. He could have settled for next to nothing right at the beginning and spent a fortune on his own lawyer and accountant, and in the end paying the wife's lawyer and accountant, and probably paid the lawyers and accountants more money than he actually could have paid his wife and walked away from it at the beginning. So not only did he give his wife a huge amount of money, because it turned out, even though he was actually a mechanic, an automobile mechanic, he had this little side business going where nobody knew about it, but we found that he had a bank account overseas where he stashed a huge, huge, huge amount of money. And at the beginning, if he'd just written his wife a check for a very small amount, he would have been able to walk away from it for next to nothing. And instead, he wanted to fight her because of the emotions. It was all emotionally based, and that's mostly what family law is like. To me, it's like living in a soap opera. I always say that. It's like being in a soap opera. It's like, you know, you watch television, you see these great stories, and they're all like family law cases. And it's a shame because, again, it's so simple. And getting back to the issue of, you know, equalization, it's really simple. The rules are just like I said. You know, any increase in value, the person with less subtracts what they have from what the person with more has. You divide that by 2, write a check to the other person, goodbye. It's over. And in order to get that figure, you make full financial disclosure, and you have to make it. And the problem that people have is especially when they're self-employed and they have expenses that get paid by the company that they don't really consider their income, or they have cash income coming in, which, you know, the other side can prove that they have, or they have assets that we find that they lied about. As soon as that happens, all of a sudden the judge is looking at them a little differently, because all of a sudden nothing they say is going to be believed. So whereas you can make a pretty good deal at the beginning, and you can make a pretty good deal all the way through if you're honest and you lay everything on the table, if you start lying, it's not going to go your way. You're going to have huge problems.